Mortgage programs. Mortgage financing has changed drastically over the last few years. Many people in the media say that mortgage lending has become more difficult to obtain. To this, I really have to say yes and no. Underwriting has not necessarily gotten harder, just gotten back to where it used to be before the days of the housing heyday bubble. That lasted for 5 years, from 02 to 07, when it finally burst. During those years, sadly, all you needed to do to get a mortgage was to breathe on a mirror. Prior to that, and presently, we need to do a little bit more than that. The number of mortgage programs that are available currently, although there are fewer, they are certainly adequate. What is available to the consumers are as follows. First, we have conventional financing, which is your basic bank loan with typical credit requirements, income, and down payment requirements. These types of loans are generally referred to as Fannie Mae or Freddie Mac. Basically, the bank makes the loan and they in turn sell it to Fannie or Freddie, and they underwrite to Fannie and Freddie guidelines. You've heard the old saying about the golden rule, he who has the gold makes the rules. Well, that has been Fannie and Freddie. All lenders use Fannie and Freddie guidelines for underwriting. Conventional financing offers your basic fixed rate mortgages with terms anywhere from 10 to 40 years. Usually require down payments from around 5 to 10, sometimes 20% down. Also available are some ARM products, which stands for adjustable rate mortgages. You can learn more about that by clicking on the ARM video link. Next, we have jumbo loans. Fannie and Freddie has a maximum loan amount of $417,000. For loans larger than $417,000, they're considered jumbo loans. And although not every bank and lender offers these products, they certainly are available. Also available are government loans. There are 3 types of government loans. VA, which stands for Veterans Administration, which is for veterans only and normally have a 0 down payment requirement. The VA does not actually make the loan to the veteran. Banks will actually make the loan and VA will guarantee it. FHA stands for Federal Housing Administration, also known as HUD, which is currently one of the most popular programs available today because FHA loans require very little down payment, 3.5%. FHA also has more lenient credit and underwriting guidelines. Similar to VA loans, the FHA does not actually make the loan to the consumer, the bank does, and FHA insures the loan for the bank. USDA, which stands for United States Department of Agriculture, also known as rural housing. They have strict guidelines as to property location and income limitations. Finally, we have home equity loans, home equity lines of credit. Both of these products are typically a second position on your property behind your first mortgage. Both products are typically offered through banks or credit unions. You can learn more about each of those by clicking on the home equity video link. For the most part, these programs are the lending programs available today. There are some non-traditional mortgage programs that are available in certain non-traditional circumstances.